Hi, welcome to the Market Alert for Monday, the 23rd of June 2025. So let's just look at prior to the events of the weekend and look at Friday's headlines. Dollar best week in 4 months. Bonds bid as LEI's trigger recession signal. Uncertainty drops. Macro risk worsening. Geopolitical risk off the highs. Interestingly enough, isn't it? And trade policy risk plunging, which I've said all along about that. It'll be a non-event come the 9th of July. Stocks lower amid mixed Iran headlines, while bonds gain over Dove Walla. So obviously Walla wants to see the interest rates cut as well. But then, of course, everything changed on Saturday when we saw this headline of Trump actually authorizing the bombing of Iran's nuclear facilities. Iran is considering all options after US strikes, with Trump says completely obliterated nuclear sites. Now, whether this escalates or not, who knows? I mean, it's certainly got the potential to do so. But what is really odd, as you're going to see in a moment, is the market's reaction to this overnight is most odd, given the fact of how this could actually escalate. It's quite incredible, actually. But let's just have a look at economic news for today. Trump spoke yesterday on the Sunday, but economic news, just in case it has any impact on the market today, just to give you a heads up, we've got FOMC Waller speaking at 8 a.m. and then we go through to Flash. It was the Flash news today. So again, watch the market's reaction to this, particularly in the morning situation with regards to Europe. The US one at 245, not necessarily. And then we've got existing home sales. And all of this really is a bit of a sideshow compared to what's going on with the main event, of course, as we just find out whether it's going to escalate or not. But as I've mentioned before in the Market Alert with regards to whether it's the Ukraine war, Israel or whatever, I should have mentioned this on Friday, as I've mentioned it before in the alert, that if you're going to go and bomb somewhere, you tend to do it at a weekend when the markets are closed, because that way it mitigates the amount of volatility in the market. So it should have been a given, really. Even a chimpanzee could have forecast that they were going to do this at a weekend, particularly after Trump came out and said, "I'm not telling you when." So that was probably a good clue there as well. But let's have a look at the market's reaction to what the events of the weekend and kick off with the Dow. So the market was up on Friday overnight. Did something happen this weekend? Major event? I don't know. I can't really tell. I mean, it is absolutely incredible. I mean, here you've got this tiny buy. You would never think anything happened over the weekend, or there is the potential for escalation to occur in the markets. Now, whether this is going to happen after, these cash markets open, in this particular case, 2:30 p.m. this afternoon, or when Europe opens, but it's just utter bonkers that the market hasn't really reacted. If we look at the 30-minute chart, we got the gap. The market isn't quite filled yet, but when you've got war, the market loves to move to the upside, irrespective of the deaths. It's all about the money, keeping the money machine going. That gap could be filled. It's just, like I say, it's very, very strange. This is market. What did it gap down? Let's just have a quick look. So this is Friday. We'll just get a ballpark figure here. And it opened there, just down 315 points. I mean, I've seen bigger moves from an FOMC meeting minutes or the non-farm payrolls than that. So again, either it's just caution on the part of the market or something is not right, because this is a very, very calm reaction to what took place over the weekend. So at the moment, the market's still above the 50 EMA in the daily chart, and potential to move to the upside. Certainly got the catalyst to do that. The markets love war, as I've said many, many times before. Let's have a look at Europe, see what the DAX is doing. So in the German DAX, same thing. It's not even taking out Friday's low. Overnight, the market is sideways to higher. There's the gap there. There's the low. We could see a test of this, though, within the next hour before the market is brought back. But that gap needs to be filled. So again, keep an eye on the prices. You can see them buying in here. And when the market gaps, they also retest and buy in here. And now the market's sideways to higher. Watch for the market trying to get back above the DP and Friday's close as well, which will be important because that's formed part of the gap there as well. In the S&P 500, same thing. You wouldn't know anything happened during the weekend. Now, had this have happened during the market opening on Friday, then the chart would look completely different. There'd be a big spike to the downside and then prices being brought back. But again, here you can see there's your gap. The market's trying to come back. They bought as soon as they opened the market, dropped the market and said, okay, we've got a buying opportunity here. Let's gap down. And if everything turns out to be non-escalatory and prices remain calm, then we can move back up quite easily. But we've managed to buy and bag a bargain here by gapping the market down on the news. Same in the UK. The market was moved lower. But again, as you see there, tiny gap. And again, the buying coming into the markets and prices starting to move back to the upside there also for this market. Doesn't mean to say you're not going to have a retest of these lows today when the market opens, bring it down, buy back at this level, and then bring the market back to the upside there. So the US dollar's had its a good run according to the headline that we saw earlier. We just pick that back up. Dollar's best week in 4 months, and I can just go back to the chart. You will see that I suppose that's the best run it's had in 4 weeks when it's been moving to the downside. But again, the US dollar does love a bit of war as well. It helps to support the failing currency that it currently is. So the dollar up there. So let's have a look at the metals reaction to the news following the weekend events from the US. And yes, we had SmackDown Friday. Was easy to predict. That was, if you go back to Friday's alert, you will see me covering that. Market's going to attempt to try and move higher, but given that it's just had the wind taken out of its sails with the events, because they, if they want to drop the price of the metals, they just say actually all of the worry is over now. It's fine. You've got two-tier Kia out at the moment as well, trying to look like he's the ambassador for peace. He's not. He's far from that. We know he and Rachel from accounts have been busy printing money to build up our armaments in the event of any escalation. So let's see how he gets on with that one. And like I say, going back to the metals, the silver price currently quite steady, but SmackDown Friday had already happened overnight down to the S3. The S3 is a great area to find support, and the market's made its way back up there. Meanwhile, in gold, the market gapping up but not holding. We're coming back down. Expect Friday's low to be tested if the heat is taken out of the events in Iran later today. Again, as the gap up, that's been filled. Didn't take long to fill that gap, did it? The stock markets, obviously, it's easier to fill a gap on the downside than it is on the upside. So the market's sitting around the DP level there for gold as well. Right, let's have a quick look at the gold-silver ratio. And in the gold-silver ratio, this moving down because silver's holding a bit stronger than gold, which we just saw where they gapped the market up and then brought it down. So at the moment, holding for the silver price there. Let's have a quick look at Friday's market action. So in Friday's market action, pre-market, we see prices rally up 100 points, come all the way back down 100 points until they buy back in for the opening of the cash market. And then prices start to move just sideways to higher, which you can see there, making their way back up to the high of Thursday. So again, just notice that a huge spike in volume, green inside the red at the 200 MA psychological level. And then it's just a matter of consolidating and then trying to break back through the averages, where we see them change all into the correct order and all the way back up to towards Thursday's high, because it didn't quite achieve that. And then the market just drifting sideways to lower. We had a potential buy signal there to get into the market, but this wasn't filled as the stop loss was taken out before the entry price was hit. And then prices coming all the way back down to that 200 MA, where again it found support. And again, you'll see the green bars inside of there as well as prices find that support. Prices moving back up to the high of Thursday. This time they managed to hit this during the mid-morning. And then the Dow comes back on stream following the holiday the day before. And there you can see the futures moving sharply to the upside before pulling back. And again, this is all geopolitical news in between the actual economic news, which is shown on the charts in either yellow for medium impact or red for high impact. So now we're consolidating. The cash market is opening and the market moves lower. But again, we see them move in here, try and buy, but then it runs into problems with the 50 and 20 moving average, but finds support there. And then we have a potential sell signal that moves down before the market buys back at the support level. Once it does this, prices then try to move higher, hit the 50 EMA, and then go down and test the 200 MA, and you can see there's a big spike in volume there as well. We then get a potential buy signal that's filled. However, news comes out and hits the prices there, takes it straight out. You can see the selling straight back down to the 200 MA, and then prices again with the green bar there finding some buying support, with prices then trading back to the upside, but not filling the buy signal there as the stops hit beforehand. And then we've got potential sell where they just spike the market down, and again the 200 MA is where all of the orders were sitting, just below there, as prices then move back to the upside. So what happens here, they move up, they shake out, you see them buy back at the 200 MA and then move prices back up in the last half hour before they then return to the downside. Very sketchy in an afternoon in the German DAX at the moment. I mentioned this in most market alerts. So again, beware of this at the moment. That's what's happening. Let's have a quick look at the overnight markets, and there you can see we had a bit of selling coming into the markets, and then prices have just drifted. Let's squash the chart up, see where we are. We've got the lower Friday there, which I think is probably going to be tested within the next hour. Then we've got the DP and the close ready for when the markets, we've got bad news. Let's get the traders to go short. Those that don't understand how the markets work, we send it to the downside. If you don't get out, they bring the market back, because war is good for the markets. Okay, that's it for this one. Like I say, it's in the lap of the gods at the moment. What's going to happen? There is escalation. There is obviously the narrative now of World War III. Let's just take one day at a time and see how this all unfolds. So, despite the bit of a dampener there at the end, it's out of our control. So let's see what happens. Have a great day as much as you can, as we live in these strange and weird times. But as ever, thanks for watching, and see you in the next one.